Welcome to the Travelex Weekly Outlook. It's the week of March 21st, and the dollar's off to a broadly softer start. This is coming as stocks moved into positive territory to start the week. In fact, they're rallying by more than 1%. And what that's helping to do right now is boost the value of riskier assets, such as currencies like the euro, which right now is at about a 4.5-month high against the U.S. currency, and currencies like the higher-yielding Australian dollar, which is at its highest level in about a week against the dollar. We have seen the dollar hold above some of the recent lows that it touched last week against some of its safer peers, such as the Swiss franc and the Japanese yen. If you recall, last week there was some widespread turbulence throughout financial markets. That had come as concerns about the situation in Japan, where we had that triple disaster involving a tsunami, an earthquake, and even a nuclear crisis. That helped to boost the dollar against some of its riskier peers. Dollar has actually hovered around its highest level in about a month against the British pound, against the Canadian dollar, and against the Aussie dollar. The dollar rose to its highest level in about 3 months. This is all coming as we have seen some of those safe haven currencies come under pressure. We did see the dollar fall to a record low, as I mentioned, against the Japanese yen. This is all coming despite that triple disaster. And that's because investors at this point think that that natural disaster in Japan is likely to cause investors to unwind some of their overseas holding in terms of assets and bring that money back home to help cover some reconstruction costs. So that is seen as being a big boost to the Japanese yen in the near term. In fact, we did see the Japanese yen's gains become so excessive that it actually resulted in the first coordinated intervention by group of 7 industrialized powers in more than a decade. Basically what they did, they moved into the market to stabilize not only the Japanese yen, but restore some calm to financial markets. They did so by pouring billions of dollars worth of yen into the currency markets, and what that did was finally depress the Japanese yen's advance. So far, that has helped to fasten somewhat of a near-term anchor around the Japanese yen. That is holding well below some of the record peaks that it touched against the dollar. But nevertheless, given the market's friendlier disposition to start the week, its near-term outlook remains somewhat precarious. That is giving raging violence in Libya and other parts of North Africa. That looks set to pick up throughout the balance of this week and perhaps even beyond. Any type of tension or any type of upward pressure on commodities, that tends to come as a boost to currencies whose nations are big exporters of oil, such as the Canadian dollar. So if that violence continues to rage on in North Africa and the Middle East, and if that does continue to push up oil prices, watch for possibly a stronger Canadian currency. The week ahead, the one for March 31st, we are going to have some remarks by Fed Chairman Ben Bernanke on Wednesday. Then we'll have several reports throughout the week on the housing market, manufacturing, and consumer sentiment. It would really take some positive U.S. data to offer any type of optimism to the market that perhaps the Fed, come later this year or perhaps early next year, might move to tighten interest rates. And of course, that would tend to be a dollar positive scenario. But that's going to do it for this week. For the latest on the dollar, feel free to check us out online.